Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and welcome to Hump Day. We got a great show lined up for you. I'm going to have my partner, Jason Walker. He's going to be joining us on the program today, 800-951-0592, the website at allamericangold.com, and the poll. I want to just a couple of quick things, and then we'll get to the Patriot Radio News Hour. The 1360 poll. It's up. I need everyone to vote. We've had a lot of votes cast. It is very, very close. I won't say. I don't want to say who's. I don't want to sway anybody, but just know that this is very, very close. We have 5 choices, as most of you know. We are making a change to the schedule. We're going to be on Tuesday, the day after Labor Day. I want to say that's the 7th, but don't quote me on that. But, you know, the first Tuesday in September. How's that? We will start our new morning show with Jason and I. We're going to be doing 3 hours. The first hour will be Patriot. This will not affect Phoenix at all. Then we'll have 2 hours of the morning show there. Alex Jones is going to move up an hour and be during the lunch hour. Rick Rodriguez, a huge fan favorite, he's going to go 4 days a week now. So he'll be on Monday through Thursday. And then, of course, don't forget, we also have Rick on Sunday with his ministry there. And then the Front Range and Leah. Then we want to know, who do you want to hear? You know, kind of in that I'm driving home from work into the early evening. And we've given you 5 choices. Right now, that is where Larry Elder sits. And I know all of you know Larry's running for governor, and he's making a heck of a show. We don't know if he wins. Obviously, Larry won't be back. If he doesn't win, I'm assuming, and I don't know this, but I'm assuming he would be back. But that's the kind of the time slot we're talking about. So your choices: Larry Elder. Maybe you want Dennis Prager. Some of the voters: Charlie Kirk, Ben Shapiro, and then Dan Bongino. So Bongino's people, they relented and said, first they said we could have them, then they said they couldn't, then they said they could. But those are the 5 choices. I don't want to tell you who's in the lead. I will tell you that it is very, very close. Go to 1360khnc.com. Right at the very top of the page, above where the schedule and the podcast are, it just says answer 1 survey question. Just click on it. Those 5 choices will pop up. Put in your favorite. And at the end of this, we will. I think what we're going to end up doing is we're going to take all of that into consideration, and we may actually bring 2 of them, the top 2 vote getters on there. But we want your input on this. We want what you guys want to hear out there. So take the time, get it out. But I will tell you, a lot of votes have already been cast. Very, very close. So make sure you have your voice be heard. At this time, listen, I'm going to bring Jason on. Jason and me and Jack, who does our producing in Colorado, we've got some scheduling conflicts this afternoon. So we're going to replay this show where the Colorado Front Range is today, just for today only. But it's so funny. I was talking to Jason. I'm like, I want to play this clip. And Jason's like, what's so funny? Hey, I want to play this clip. And we said, you know what? Let's do this show together, because I think it's always important. You hear from me, you hear from Jason, you hear from Brian, to hear what other people are saying, because a lot of times they can explain it just a little bit better or maybe in a different way to get people to really get educated.
A different angle sometimes is good, Joe.
Jason.
Sometimes a different angle helps, just coming from a different point of
view. And so we're going to play a couple of really good clips, and then Jason and I will go back and forth on it. But Jason, really close. That what's happening about who people want to listen to.
I kind of thought it would go that way, actually, and
see, I did it. I thought there was going to be one. I didn't know which one, but I was like, okay, one of these guys is going to be the guy. It's really close.
I was talking to Kevin coming off the Jacked Up show, Joe, and he said, "Look."
By the way, big fan of Kevin.
Kevin's good. Kevin's good. Kevin LaRusso, man.
His information's fantastic.
You're going to be hear more of him on the New Morning Show. I think he'll be our Wednesday guy, but. He was saying number one, Ben Shapiro across the country right now when it comes to people that what they want to hear on a daily basis. Ben Shapiro is actually, a lot of it because of younger people. But so it did surprise him. I told him, well, we're looking at different avenues of voting and whatnot. But he's like, look, man, I know that a lot of older people that listen to this station maybe don't know who he is or anything. But
yeah, see,
they're getting to know him
because that's what I would think, right? Ben Shapiro to me is like the podcast people. He's more like a Joe Rogan, if you will. And so I was like, he was one of the guys I thought, He's not going to do a whole lot, but you never know. Again, I don't want to sway anybody in any direction. It's close.
It's close. Yep.
When we get back, we got one heck of a show coming up for you. You don't want to miss it. Patriot Radio News Hour. We'll be right back. 800-951-0592, Patriot Radio News Hour. We're going to go really quickly. One last thing about the voting. I just want everybody to know nobody has less than 10% of the vote. That's how close it is. Nobody has less than 10% of the vote. And I don't think anybody has more than 30% of the vote. So it's a tight one. Get your votes cast. So Jason and I, we want to go quickly. We're going to go. Yesterday, I was telling you all about Jeffrey Gundlach. I left out way too many things. And so we made the decision. We're going to play him. We're going to do it right now because it's 14 minutes long, so it's going to take up most of this segment. But I want to try to give a little time for Jason to chime in on this. Jack, if you're ready, let's get Jeff Gundlach in his interview yesterday with Yahoo.
A fascinating discussion with DoubleLine Capital founder and CEO Jeffrey Gundlach. Jeffrey, you're just making a point about your strongest conviction on the future of the U.S. dollar. I want to explore this a bit further and help our viewers understand what some of the longer-term implications of this might mean, especially for the standing of the U.S. globally.
Well, the U.S. has enjoyed the status of sole reserve currency globally for decades, and it's an incredible benefit. We also have the biggest military in the world, which is kind of goes hand in glove with being a reserve currency, I think. But in the aftermath of the lockdowns and the pandemic that continues to wear on, the strongest economy in the world by far has been the Chinese economy. And the U.S. economy has bounced back with a lot of consumption. A lot of that consumption is going to China. It's one of the reasons China has such a strong economy. So what we're seeing is the United States is starting to fall behind in economic growth. That's not a new thing. That's been going on for a generation, the U.S. falling behind. But the Chinese economy is growing so rapidly that the estimates as to when the Chinese economy will be the largest in the world keep getting pulled forward. 20 years ago, it was thought to be 2050. The Chinese would be bigger than the U.S., and that was 2040. And now the estimates are maybe it's in the 2020s, maybe even 2028. The Chinese economy gets bigger, and China's made no secret of the fact that they want to be a global player and have at least a seat at the table of global reserve currency status. And they're spending like crazy on military, and have also made no secret of the fact that they want their military to be dominant, maybe the biggest in the world. Also, they have huge savings in China. They have a culture of savings. They sort of the gold medalists of saving historically. And so when we put all those things together, with the U.S. growing debt like crazy, we have debt to GDP that is fueling the majority of our so-called economic growth. So is it really economic growth when you borrow money or print money, send checks to people who turn around and buy goods on Amazon in addition to maybe paying down debt and speculating, and these goods come in from China? So we're running our economy in a way that is almost like we're not interested in maintaining global reserve currency status or the largest military or global, call it superiority or control. And so as long as we continue to run these policies and we're running them more and more aggressively, we're not pulling back on them in any way. We are looking at a roadmap that is clearly headed towards the US dollar losing its sole reserve currency status. And I feel that as long as we run these policies, it's almost certain that that's going to happen. And because of that, the dollar should be going down. The value of the dollar is so high because we enjoy global reserve currency status, and we don't really respect it enough. We take it for granted, I guess. We seem to take a lot of things for granted these days in the United States, relative to how we thought about things in prior decades and generations. And I believe that we're setting the stage for us to, unfortunately, I use the word enjoy. I guess that's experience, I suppose I should say, the consequences of our actions, the way we've been running a non-serious economic program now for really since 1980, but it's really accelerated so much in the past decade, and there's no signs of it abating. So that's the reason why the dollar is going to go down, and it's already peaked. I mean, it peaked at the Dixie Index at 103. There was a double top in January of 2017, and then right after the pandemic hit, and now we're living down about 10% lower. And I believe the dollar is going to take out the lows of the past down cycle. See, the dollar has been in a series of declining highs for decades. It goes back to the 80s. And for that reason, I think when we get to the next break to the lower level, the dollar is going to go past the most recent low of around 80 and even take out the low of 70. So I think there's easily 25% downside in the US dollar. And with stocks so overvalued, versus historical metrics, it means that other stocks, for U.S.-based investors, buying stocks in foreign currencies. Right now, I prefer the euro. Ultimately, will be emerging markets, maybe starting next year. That's going to be the place to be.
It's certainly an interesting thesis you lay out there. I do want to bring up the Federal Reserve again, and of course, a lot of talk lately, Jeffrey, as you know, about taper talk, if you will, and we have the symposium coming up, the Jackson Hole symposium later this week. Not that we'll get any insight on tapering there, but what are you kind of looking for from the Fed? How are you thinking about what their next move might be?
Well, I'm certainly of the mind that the Fed is not thinking seriously about raising short-term interest rates as long as they're doing quantitative easing. So the taper was thought to be impossible for anywhere here in calendar 2021, but there's whispering behind the scenes. Some of the Fed officials are thinking that maybe they should start tapering even as soon as next month. I don't think that's going to happen. I think they're going to wait and see. They're clinging to this transitory or temporary inflation thesis. They've already been wrong on that. When they've talked about this bump in CPI and other inflation being temporary, they kind of define that as being 2 or 3 months. But it's already been more than 2 or 3 months. Now they're talking about 6 or 9 months. I think if we go into December, if we end the year 2021 with inflation on the CPI headline above 5, which is about a 50-50 proposition, I think. We're at 5.4 right now. If it stays for the year at 5, then I think the Fed may start tapering, because the transitory inflation thesis will be very hard to defend at that point. Keep in mind that the PPI, which is wholesale prices, which leads CPI, on the headline are 9.6 or something like this. I know it's a 9 and change, and on the headline it's 4.3. So the Fed policy is going to depend completely on whether or not these elevated inflation levels can endure. And with commodity prices having stabilized but not dropping, I think it's a fair bet that inflation is going to continue to be stubborn on the upside. And with that happening, taper becomes more of an issue and more talked about. But I don't expect tapering is going to happen. I would think maybe December at the earliest.
Mm-hmm. Jeffrey, my colleague Brian Sazi has a question for you. Brian?
Jeffrey, yes, just following up on what you were saying about the Fed, given that you do see stocks as overvalued, when the Fed does taper, how disruptive do you think that will be to stock and bond markets?
Well, it certainly would be negative for the stock market. As I pointed out, the expansion of the Fed's balance sheet goes in lockstep with the capitalization of the S&P 500. And when they tried to taper in 2018, the stock market had a sort of mini crash. It actually went into a very compressed bear market in the fourth quarter of 2018, and it forced the Fed to completely change their activity. So it has a negative effect on the stock market. For bonds, what's weird is when the Fed is tapering, historically, yields have actually fallen. It's weird. It's kind of counterintuitive, but historically, that's been the case, that yields have fallen when the Fed has tapered. And now the Fed is, since the Fed has been expanding their balance sheet, actually, Treasury rates have risen. They were at a crazy low level once we went into lockdown. The 30-year Treasury bond actually got down to 1% on a closing basis, and then the Fed reacted with massive stimulus, and now the 30-year Treasury bond, it's not tremendously higher, but it's up at about 1.85 or so. So as they've been doing this quantitative easing, stocks have gone up, and bond yields have modestly gone up. And so counterintuitively, a lot of people don't understand. They think if there's tapering, bond yields will go up, but historically the opposite has been the case. So it would probably mean bond yields stay subdued and stocks would fall.
Jeffrey, I have one question for you on the economy, and I'm so glad to have you here today. So we had consumer sentiment crater just the other week, yet we also have job openings at 10.1 million, which is incredibly high. And then when you look at GDP, we're essentially flat from Q4 of 2019, yet we're flat, but with 5.8 million fewer workers, so productivity has gone up. How do you kind of think about the overall economic picture here, especially given all of that as a backdrop?
Well, the economic picture is very, very hard to divine ever since the government got so involved in the economy, and they've made so much. It's like pushing on like a waterbed or something. You should push on the side of the waterbed, the other side goes up, and weird things happen, and you can't really compare it to a time period where you're not pushing on the waterbed. So it's very hard to discern what's going to happen. But certainly, the employment situation that you point out is really fascinating, and it's kind of seminal to the screwed up nature of the economy. Everywhere you go, almost any profession you ask, they say that they have a hard time getting workers. Well, no surprise. People are making more money or the same amount of money by not working, and the government continues to support that. So what'll happen when these stimulus programs ultimately end, or people actually have to start paying their rent? There's going to be tremendous economic disruption. The officials have a tiger by the tail, and for now, they are not getting clawed or mauled by the tiger. But if you let go of the tail of the tiger, you're going to very likely get mauled. And that's what's going to happen. If you ended you don't have to pay your rent, the eviction moratorium, there's going to be all kinds of consequences to that. Rents are going to go way up if that happens, I think. Also, people are relying on stimulus, and the stimulus is responsible completely for this economic growth. GDP is 70% consumption. And as this economy has rebounded back on a GDP basis, it's done so with tremendous increase in the trade deficit. Multiple percentage points of GDP have come from an increase in the trade deficit. And that's not real GDP. Consumption is not really the economy. The economy is about production. And when you buy goods produced in Asia with stimulus money, it shows up as GDP, but it's really Asian GDP. It's consumption in the United States. So the economy isn't really that strong. As you point out, with 5 million fewer jobs, it shows up as correctly mathematically in the productivity equation, but it's really Chinese productivity. Because again, if you just consume goods, you're not really having economic growth. You're just having consumption, but we define it as economic growth. So it'll be fascinating to see what happens when these programs end. I saw that the $300 unemployment supplement is being curtailed on schedule, but states still have a lot of money that hasn't been dispersed. So the stimulus on states' discretion could continue longer, even though it's now no longer being funded weekly by the federal government. But when it all ultimately ends, we're going to see, well, this is people talk about the stimulus and Fed's low interest rates as a punch bowl. And certainly this has been a very deep punch bowl, spiked pretty heavily, with 100-proof liquor. And once this party ends, the hangover is going to be in the form of sharp drop in economic growth. I think one of the reasons consumer sentiment dropped so much, just cratered at the most recent reading, has to do with the fact that people are aware that maybe the stimulus is getting a little shakier in terms of our ability to predictably rely that it's coming again. And also the misery index, which I think Ronald Reagan created, which is the sum of unemployment and inflation. Once it goes over 10, they call it misery, and it's at 11.3 right now.
We'll stop it right there. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. We're going to go quickly here. There's about another 30 seconds left. So let's finish Jeff Gundlach, and then we'll get Jason's opinions on what he had to say. Jack, go ahead and play the rest.
They call it misery, and it's at 11.3 right now, the sum of CPI, headline, and unemployment. And maybe the consumers are feeling the inflation. I think people are starting to realize that inflation's out there. If you ask people what is the big thing that's worrying you about the economy, overwhelmingly right now, what comes across is inflation, because people see it at the gas pump, they see it at the supermarket, and as long as there's stimulus happening, I see food inflation is continuing.
Well, Jeffrey Gundlach, founder and CEO of Double Line Capital, I thank you so very much for stopping by Yahoo Finance Live today.
Jason, your thoughts. So he says he's almost like in your camp. He says, hey, interest rates are going to stay low, which is something you said the last time I had you on here.
Right.
Then he says, hey, this whole thing, this GDP, it's fake GDP,
Yep.
driven by stimulus and consumption, and really, that means it's really more Chinese GDP. And now he sped up the clock to say, listen, China's going to pass us completely here in the next few years.
Yeah, he's right in line with how I see things, Joe. The way I look at it, America's economy, the Federal Reserve System that we're ruled by, it's like a broken car. We need a new car, but knowing that they need a new car to run a new economic system, it's not just that the one thing's going to break. That the transmission is going to go out. That we know this, but also the CV axle is getting ready to go out. Either one of those things is going to derail the whole car. The starter's getting ready to go out. So, all these things that the Fed is trying to I think lengthen the old system before bringing in a new system, Joe, is what we're looking at. And this is why I feel like they're really going to back the interest rates up to get more people into debt, to get people to refinance or get homeowners that can't qualify now to maybe qualify, and save all these people that are backwards because of coronavirus and forbearance and rent forgiveness. You go to a 40-year mortgage, and I think he's got it right. Now, one thing I heard him say earlier on is he's like, well, Americans don't seem to really care that we have the world exchange currency.
You know what's so funny? I was just going to say, here was his quote because you picked it up. We're running our economy in a way that is almost like we're not interested in maintaining global reserve currency status.
And I would say Americans care about that greatly. I think central banks of the world don't care who has that status, Joe. That's the difference that I'd have with what he said, which is I think Americans care. I think Americans would love to keep the world trade status of our currency. I mean, who wouldn't want that, right, Joe? I mean, you want the strongest currency in the world.
I don't think he was talking about us. He's saying we're running our economy. He knows we don't run the economy. I think he's taking a shot at the Federal Reserve thing.
Correct. Yeah, and you're right. But if the average guy listening, he's got to be sitting there like, well, I want to keep our status. I want America to be number one. I want to stay with the highest standard of living in the world. and with no ability, we have no control over this. I think it's going to be moved purposely towards China. And here's the thing: I don't think China is going to keep that status very long, Joe. If it moves heavily towards China, and then people start buying in yuans, I think the manufacturing starts moving very quickly into Africa, because that's the next cheap labor pool that they're going to develop. It's just a game. They're just going to keep history repeating itself, Joe. And what happens is our
first, I guess, it was Europe.
Yep.
Right. Then all of a sudden it switched to America.
World War II, right? Purposely World War II was to switch that from the pound sterling to the dollar. That was what World War II was specifically about, was to change world markets and bring Germany and other industrialized nations into the Federal Reserve note as world trade currency. That's what the meetings at the end of World War II was about, Joe, is to change the economic system.
Yeah.
Bretton Woods.
Yeah.
Yep.
Clearly, Bretton Woods, for those of you that don't know, really that was the most important thing that came out of World War II was Bretton Woods, which said, hey, all commodities will trade in dollars.
Yep.
And that kind of that's how the dollar became the reserve currency of the world. Today, you can now buy crude oil in euros. And by the way, when I say that, you could not buy crude oil, soybeans, corn, cotton, steel without dollars.
Yep.
Of course, today you have your choice of about a half a dozen different currencies you can do it in. But as America, the holdings of dollars continues to fall all over the world, and the Chinese still are a very small portion. They're down at like 3 or 4% of holdings, and I think Jeffrey Gundlach sees the writing on the wall just the way I do, which is, hey, once we're the biggest economy in the world, and they're already the consumer of the most stuff and the producer of, more importantly, as Gundlach pointed out, they're the biggest producer of stuff. And in the next, what are we talking about, 6-7 years here, they're going to pass the United States in every metrics, and they're going to want their currency to reflect that.
Absolutely. And it's going to be a good 1-2 punch, because the clip I'm going to play on the next segment, Joe, is just showing you a company in a very specific place in the economy, information. These guys know what's going on because they handle the information of the CIA and the FBI, Palantir Tech. So it's going to be interesting. We're going to play this.
So Jason said, I'm going to set this up for everybody.
Yeah.
What we're going to play next, Palantir Tech, I talked about it, I want to say it was last week or the week before. They were the first, what I'll call, major public company to say, hey, we're buying gold. But Jason knows this company very well. He knows it better than I knew. They were a big data storage. They really are a data mining company. But they're the ones that and I didn't know this till Jason told me, they're the ones that kind of do the spying, if you will, for the CIA and the FBI and a lot of these government agencies, right, Jason?
Yeah, I mean, if Tesla went out and bought a bunch of gold, that'd be interesting. It's like, oh, okay, maybe Elon Musk knows something. Or if Apple suddenly started buying a bunch of gold, oh man, they probably know stuff that we don't know. But this company, not being a well-known company, actually has information at their fingertips as to why maybe they should be buying gold. I mean, what's the scary part in Michael Invest, this guy, I just love his accent. It's good to just listen to this guy. And I think he's kind of a Joe and Jason kind of guy. I think he's an average guy in Australia that sees the same things we see. But he lays out the world condition, and then he lays out this company based out of Denver, Colorado, and why they're buying 100-ounce gold bars. And to me, Joe, it's like if you have the inside track, you have the information, you pull the trigger on that, right?
That's right, yeah. I mean, if you know what's going to happen, you prepare for it. And that's exactly what they're doing. That's coming up next. Don't touch that dial. 800-951-0592. Again, we're trying to go quick here to get all of this in.
Yep.
Jason has the clip. Jason, just lead us in here to the clip.
Yeah, Michael Invest. Let's put it in there. He's talking about a company that, and he's going to explain the whole thing. It's great. So let's listen to it, and then Joe and I will have the last segment to talk about it. Go ahead, Jack.
Well, smokes holy, everyone. In today's video, we've got something very important to discuss. I don't know about you, but to me, things that are going on around the world seem absolutely insane. And there are so much things going on around the world and so much events that are happening at the same time, it's leading me to think that we're on the verge of something huge that is going to be coming very soon. But it's not just this young crazy chap that's thinking about this, but also there's a company that knows America's darkest secrets. This company is an intelligence company, an analytics and a data company that has worked for government bodies like the CIA, the FBI, the CDC, major financial institutions. They've also been working and collaborating with healthcare companies around the coronavirus outbreak. Who is this company, you ask? Palantir Technologies. Now, if you don't know who Palantir is, Palantir Technology is a public American software company that specializes in big data analytics. Headquartered in Denver, Colorado, it was founded by Peter Thiel, Nathan Gettings, Joe Lonsdale, Stephen Cohen, and Alex Karp in 2003. And very interesting about the name of the company, the name is derived from the Lord of the Rings, where the magical Palantir were seeing stones described as indestructible balls of crystal used for communication and to see events in other parts of the world. And so this company that has a lot of data and information about some of the most powerful institutions in the world is now hoarding piles of 100-ounce gold bars in case of a coming Black Swan event. Because look at this, everyone. So the company has spent $50.7 million in 100-ounce gold bars in August. And listen to this statement, everyone. This is something we have to be concerned about and something we have to start preparing for, which I'll get into later in the video. They said embracing non-traditional currencies reflects more of a worldwide view. Shaiman Senkar, the chief operating officer, said in an interview, "You have to be prepared for a future with more Black Swan events." Holy smokes, everyone. This is a company, a data analytics intelligent company that works for the US government, that works for the big financial institutions, the healthcare institutions. They know exactly what is coming, or they've got intelligence of what will be coming way before us, the public, are going to know about it. And again, I don't know about you, but for me, I've been noticing more and more Black Swan events that are going on around the world. And we all know that the Great Reset that they've been talking about,
the very idea of human being some sort of natural concept is really going to change.
Our bodies will be so high-tech, we won't be able to really distinguish between what's natural and what's artificial.
is going to be coming. They say in 2030, but really that could be a distraction. There could be many other big major events that will be coming much sooner. Now you may be thinking, why are they getting into gold? Well, just some of my thoughts and opinions why they may be doing this. For one, stocks are at all-time highs, real estate's at all-time highs. They are interested in cryptocurrencies like Bitcoin, but that is a lot more risky. Gold is a hedge against inflation, but it's also a hedge against, global chaos. When there's global chaos and uncertainty around the world, people do tend to flock to gold, and gold is also the ultimate hedge against a currency collapse. And what have we been seeing around the world that's happening right now? People are losing faith in fiat currencies. People are losing faith in the dollar. Where I am, the Australian dollar is falling, and I've been seeing many currencies completely collapsing around the world, and we're seeing extremely high inflation around the world, and we're seeing high inflation really going into asset prices. We're seeing countries like Venezuela, Lebanon, Argentina, all their currencies are being devalued rapidly, just to name a few. Also, we've got issues going on in Afghan. We've got issues with China, and that's another huge risk. China is getting more authoritarian. They're clamping down on their billionaires in their country. Companies that are trying to go public in the US or companies that are trying to IPO, they've been clamping down on them, and they're really reining in their citizens and their billionaires, because I think, the billionaires were maybe getting a bit too cocky or a bit too arrogant, maybe started questioning the CCP, and they're now showing their true colors to say, hey, again, just remember, we're in charge. And since they've done this, we've seen a lot of their tech stocks have absolutely crashed by over 50% in China. We're seeing lower GDP growth. We're seeing China buying less of the world's goods. And we're also seeing shutdowns in the ports with more lockdowns. And if that's not enough, we're seeing a lot of unrest in many countries about the health mandates that are going on right now. So everyone, what does this mean for you and me, and how can we prepare? Well, what this means is this company is buying insurance, and this is something we should do as well. I'm not saying, sell your stock, sell your house and go all in on gold, but I'm saying gold is kind of like insurance, and not financial advice, but I like to have at least 10% of gold in my portfolio just in case things really hit the fan. And also, if you have a diversified portfolio, when you have multiple assets like stocks, real estate, Bitcoin, precious metals, well, you want to allocate money to an asset when it's not really hot, or it's not really a talking topic, or it's not really booming. So if you do want gold in your portfolio, now with it being at a bit of a discount, it may be a good idea to start considering it. So that way, if another black swan event does come, like they're thinking will come, I do think gold will appreciate, and all assets that have been crazily inflated, like what we saw in 2020 when stocks crashed but gold shined, well then this may be a good way to hedge your bets. But it's not only this, everyone. If there truly is dark times coming ahead, you also want to find ways to become more self-reliant.
That's good, Jack. We're good. I didn't know I was on the air, so sorry about that. But we'll be right back. We'll finish this with Joe and myself right after the last break.
800-951-0592, Patriot Radio News Hour, Joe Jaquin, Jason Walker. Just closing up here, just two really great interviews when you think about, okay, Jeff Gundlach, and I don't know, what's Double Line? They are the bond market. Nobody understands what's happening in the bond markets more than Jeff Gundlach. He's the bond king for a reason. And you think about the debt machine that is the U.S. Then you go and say, hey, let's look at a company. What company could possibly know more about what's coming than a company that really provides all the information to the Defense Department, right? The FBI, the CIA, right? They're the main place the government goes to get their data. So Palantir absolutely has an inside look, and these guys got together and made a decision. You know what?
It's time to buy gold.
Right, Jason, right?
Time to get some gold. Yeah.
And they used the Hassim Talib, the Black Swan event, which is now they say this is an event that people didn't see coming. And of course, I don't believe that. I think people absolutely see them coming, but they do such a great job of shielding us from seeing it that it looks like and appears like this is an event that came out of nowhere, i.e. a Black Swan event. And they said, hey, listen, this is why we're doing it. We see the data. We know what we're turning over. We know what they're asking for. And we're getting our financial house in order.
Our company,
and this is a company.
What they're saying, Joe, they're saying that our company is uniquely positioned to see the black swans flying in for a landing.
Right. Which I agree. They are unique in that perspective. And I find it interesting because they can do anything. They can buy treasuries. They could buy renminbis. They could buy euros. They can buy other company stock. They could buy their own stock.
You got to believe. You got to believe for the government to trust them with this information. There's got to be a trade somewhere, and then part of that trade's got to be, hey, we want to make a lot of money while we're doing your stuff for you. So you got to believe that that's part of their deal. It's got to be.
And I think it needs to be part of everybody's deal. Make sure your portfolio is ready. Jackson Hole starts tomorrow. Gold's down $10. It's not a big deal. And again, really, it's not a deal at all. This is just the Federal Reserve saying, hey, give us some credence here. Silver's kind of ignoring the whole thing. It's off about 8 cents. Silver right now at $23.80. We still have some Type 2, not very many Type 2 Silver Eagles, brand new Silver Eagles, $6.85 a roll, and some $20 gold pieces from yesterday at $2,075 at 800-951-0592. Jason, any final words or last thoughts?
Yeah, I just want to say I spoke in front of a group yesterday, Free Colorado. Got a whole bunch of new listeners and customers, I think, for Patriot Trading Group. And I just want to say I was glad I was invited to speak. And, we're going to keep growing this thing, Joe. I'm pretty happy that we're in a position to do what we do.
Yeah, me too. Make sure you cast those votes, too. We want to play what you guys want to hear. 1360 KHNC. Hit the survey button and let us know who you want to listen to. Jason, huge shout out to you. Thank you for joining me today. We'll be back tomorrow. God bless everybody. Have a great rest of your day.